Hello, everyone. How are you doing today, guys? Tayara said, I can't hear anything. Yes, because I wasn't speaking. How is everybody doing tonight? Come on. Where are you guys watching us from? And of course, let me know if it's your first time here. So, hello, Tiaras. Frederick said, hi, brother. How was your weekend? Hope it's been blessed. Yes, absolutely. Nice. Busy. On the weekends, I'm full on with work. It's actually the busiest days of my week because I have to prepare all the market analysis that I distribute out to some prop firms, some hedge funds. Usana said, hi. Can you guys, can you hear me? Please, let's check the audio if it's okay, if you can hear me. From my end, I see that everything is fine. Good. Yeah, from Poland. Nice. Babalola said, first time here. Welcome from Germany. Somebody said, De Jose, first time here. Welcome from Spain. Papio, first time. Abdullah said, hi. Hello, friend. Lency. Yes, okay. Hola, from where? First time here from northeast of England. Petri. First time here, Abdullah. From Botswana. Nice. FX Tree Lover. First time here from Italy. Igna, first time from South Africa. From Holland. Jesus. Somebody asked, scam or not? No, we are real people, reality, no bots, nothing. Okay, it's me. Let me just play the disclaimer just to make sure that everyone understands that this webinar is for education purposes only and not intended to give you any kind of investment or personal advice or any personal recommendation. I was about to say accommodation. So for those who are wondering if this is real or not or whatever, please, I think that head there in the circle matches with this head here. So feel free to Google me. My name is Theo. My surname is Theodorou. I'm Greek Cypriot. I'm on all social media, Instagram. I'm everywhere. If you just need to check if I'm a real person, please feel free. I'm on Telegram. I'm on everywhere. So just to make sure that you don't have any thoughts. So I just share a link. You can check it out. So from United Kingdom, Joseph from Austria, nice. From Manchester, UK, from Canada, from Spain, lady said, from Birmingham. Wow, awesome, fantastic. So myself and of course the Elevating Forex team would like to welcome you to another webinar here. VS from UK. Perfect. So we are about to dig down and see what the markets they did last week and what we expected to do them next week. Oh, Ken from Singapore, one of my favorite places. It's Singapore, and I have to admit it. Okay, sorry, no offense. I used to live there for some time because I used to live in Australia, and I was also visiting Singapore sometimes. I thought I was like a local over there. So as for if you are wondering what my expertise, what I do in trading, first of all, I have to let you know that I'm a certified financial technical analyst. I hold the certification. This one, it's issued by the Society of Technical Analysts in the UK. And also, I have another certification as a certified market technician that is being issued by the International Federation of Technical Analysts, which is a worthwhile organization. Of course, I have more than 10 years experience in trading, and I specialized in currencies, indices, commodities, whatever has to do with technical analysis and leveraged markets. Now, beside my daily activity as a trader, I also keep myself extremely busy on the weekends preparing market analysis for well-known hedge funds as well as trading firms, prop firm trading firms. That's what I mean by saying trading firms. And yeah, about the news that they are coming out, and then I do chart analysis and I explain what we expect and how we can trade this stuff. So I also publish some articles in financial magazines, and I also have done webinars with traders like big names in the field, like Mr. John Bollinger on the left top corner, who introduced us to the Bollinger Bands. Also Steve Ninson, who introduced us to the candlesticks. If you are trading or if you heard about candlesticks, it's because of this guy over there. Okay, another great traders about volume control, about MACD and VWAP, about trading psychology down there. So yeah, pretty awesome. Now let's get down to the markets. And first one, by the way, just to make sure, can you guys see my screen? Here is the Euro US dollar, and of course I will add the watermark. Yep, because I forget it all the time and somebody is reminding me all the time. Oh, Digan said, happy to be here with you, coach, from Canada, of course. So thanks for the vote of trust, and that I also, guys, offer private coaching, mentoring, one-on-one. So if you are interested, you can let me know. And I just say that because Dickens happens to be on this webinar as well. And thanks for the trust. And yep, looking forward to catch up with you and to everyone else. So Euro US dollar on the weekly chart. Last week we said that Euro is not expected to be, let's say, among the most strong currencies because of the weak fundamental side of the Euro. Now, do we need to know kind of fundamental stuff? No, we don't. But if we know, we can anticipate the performance of a currency. So anticipating a currency's performance will give us a heads up of what we can look forward the upcoming week. Okay, it's important anyhow. Hello from Sweden. Hello, Raleigh, and welcome to the webinar. So a doji candle, as you can see on the weekly chart, I like to focus on the weekly price action. And if there is a weekly trend, and then I like to go down to the lower time frames to snap the entries from there. So this week, a doji candle, let's say around resistance in an uptrend, it looks like that. Look, if the buyers, they were very strong at this point here, they should have pushed the price higher. So why they didn't do anything? Perhaps there is a kind of strong resistance here and there is a kind of market weakness. Okay, so this week, if we go down to the hourly time frame, first we have to understand what kind of market structure is here. So the market structure here, it's like nothing. There is no, when you see the price starting from the left middle and on the right middle, it means that the market is sideways. It doesn't go anywhere. It doesn't move. There is no direction. So what are the chances? Yannis asks, you are from Greece. I'm Greek Cypriot. Yeah, I'm based in Cyprus, Yannis. Yeah. You can type in Greek here. I will reply in English. So the what we want to see in this particular one, actually, we want either the euro to get a direction over the US dollar and move lower based on the doji, let's say a doji reversal at that resistance area based on the weekly chart analysis, or we want to see the break to the upside. Now, for as long as the price remains within these boundaries here that I just draw, it becomes very low probability to pick up entries within this region. Okay, why? Because there is no defined or there is no directional momentum in this market. Okay, if you're going to use some kind of indicators like RSI, you're going to see that they are pretty flat. So it's better to wait to see direction. Not every week the markets will be tradable and readable. There are times, like if you were on the previous webinar, most of you were here, you're going to see when we go to one currency pair, what we said last week and how it ended up being, okay? Because it was very clear. It had clarity, that particular one. So also, guys, understand that this week, non-farm payrolls, it's going to be the first week of October, and the non-farm payrolls will be announced on Friday. The markets, they just tend to be a little bit rocky during the weekdays until the non-farm payrolls, and unfortunately we have to accept that and go with the flow. Okay, so next one, Great British Pound against the US dollar. If we see the weekly chart, just to get the idea of the direction we want to trade during the week, and trust me guys, by using this type of methodology in your analysis, it's gonna save you a lot of time, headache, and emotional distraction. So price makes higher highs and higher lows. Last week, the price was moving higher as we expected because we said that the Great British Pound was among the strongest currencies across the board. So the previous week, the price moved a little bit higher, but not that significant to give us the confidence to continue looking for more bullish opportunities this week. So it's a bit of a battle now. If we desperately want to trade this particular one, Great British Pound against the US dollar, and you tell me, Theo, that's the only currency pair that I trade, what should I do? Well, here is the answer for you. Overall, the market, it's in an uptrend, okay, overall. Now, do we have a break of significant market structure just to start looking for short positions? If we do a little bit further analysis here, we can see that there is a kind of resistance here. The price touched this level once, twice, 3 times, and it got rejected. But we can see that every time the market dips, there is a significant buying pressure, pushes the price upward. Okay, so what we want to see ideally is the price either to break above this area or below this area to be on the safe side before we committed to look for long or short positions. Now, if the price breaks above this resistance here, the prices for junior traders, the prices, they used to make these wavy moves. They don't used to go just in a straight line. They used to make these cycles, as we call them. All right, so it can be a good way to exercise some patience. All right. When the price breaks above, if it's going to break above, wait for that counter price move. It's going to come down at some point. You can use Fibonacci retracement, find some areas, and then we're going to see reversal price action, and we can take long positions. Any questions, please write them on the chart. Hello, Milu, greetings from Germany. Welcome to the webinar. Next one, let's check the Australian dollar against the US dollar. Last week, the Reserve Bank of Australia, they kept their interest rates at 4.35%. And this gave boost in the Australian dollar instead of making them a weak currency, okay? Usually when the reserve banks or major central banks, they cut or they don't change their interest rates, it means that they don't increase their rates, the currency tends to become a weak currency. But in this case, because the Fed cut the interest rates in the US a few weeks ago, then Australian dollar it took this, or the traders and investors, they interpreted that as a sign of strength, because, okay, in Australia they didn't cut rates, in the US they cut rates, and yeah, let's just keep looking for buying opportunities on the Australian dollar. That was the idea. Now, what happened though is that the Aussie tried to clear all this resistance, weekly resistance here. Now, we have some more confidence on the Australian dollar, and it's something I will keep an eye on. If there is a continuation here, we're going to see the price to move higher. How can we trade it is the questions you might have. Well, let's go down to the hourly time frame, and we see here, if you compare this chart with the previous two, the Great British Pound and the Euro against the US dollar, we see that this one made a higher high. Do you guys see how this chart indicates an uptrend, the prices rising? Okay, so in this one here, for example, VS asks how much is price retracement if it breaks resistance, and how you calculate that. If it breaks resistance, price retracement, what do you mean? If it breaks resistance, let's say like it broke here, it's going to go up, and at some point when I see the swing high formation, I will use the Fibonacci from the swing low here to the swing high, and I will find the area where it says 61.8 and let's say 78.6. And this area, it has to be aligned with a kind of static support in the market if we are talking about an uptrend. So at this area here, if the price will stop printing a bullish reversal price action, I'm going to look to pick up a trade and go long. Other traders, they might look for something different. They like to place buy limit orders. Buy limit orders, it's placed when we identify the exact level we want to buy, and we can just drop, let's say, a buy here with a stop loss around there, and we wait for the price to enter into this area, and the expectation, of course, is to move away from the area, to move upwards, so we can make money, right? So there are two ways to trade this one. In a strong uptrend, limit orders, buy limit orders are very welcome, as well as in a strong downtrend. Okay, now if you want to measure how far the price will move after it breaks a resistance, you can use the Fibonacci extension tool. It's the same with Fibonacci retracement, but you do it in the opposite side. Usually 101.618, it's the magic number, okay, for the currencies. Actually, for the indices it's a bit different, but for the currencies it's a magic number. It works exceptionally well, and if you are long here, you can take profits, let's say, around this area. A question please from Krishna, but not chart related. Did you mention just earlier that the week of non-farm payroll day, first week of October, it will be, do you mean it's not ideal to trade in or trade lightly, so less than usual until? Now, I mean that the markets, they anticipate, the major currency pairs anticipate what's going to be the outcome on the non-farm payrolls. If the outcome is going to favor the US dollar or not, then the market will reveal their direction. Okay, that's what I mean. But of course, we are treating every single trading day as a unique day, a new day, and we just keep trading. Yeah. But I don't really like to take trades anymore, because I used to do it, of course, when I first started trading. I did all the trading errors. I don't used to like to trade now the event, actual event. Because sometimes you can make a lot of money, sometimes you can lose a lot of money as well. So, are you up for the gold analysis? Just let me know. I will continue with the USD Canadian dollar, because last week, remember, we were here looking at this chart and we said the market made a lower low and it moved upward, and on the weekly chart it printed a bearish engulfing reversal price action. So that made our trading life much easier, because on the hourly time frame we could have start looking for short positions. So starting Monday, it was somewhere there. We want to see green and bearish candle, bearish reversal to sell. We want to see green, and if reversal price action comes during the times we are looking, we can sell. Now, it doesn't mean because let's say some lucrative setups appear on this one during Asian trading session or during the end of the New York trading session, while most of us, we were not looking at the charts at that point. It doesn't mean our analysis it's not good. It doesn't mean because we didn't manage to pick up trades while we were active trading the chart, the market didn't offer the opportunity as we expected, and it offered it in another way. We have to change our strategies and we have to look for different stuff. No. Okay, you have to accept that this is also a part of the game. I want you to treat trading like, let's say, fishing. When you go for fishing, you don't know if you're going to catch a fish, right? So if you go fishing and you don't catch a fish, it doesn't mean you're not a good fisherman or fisherwoman. Maybe there was no fish at that point. Okay, so it's sometimes trading, it's simpler than what traders, they try to put a label or something else, another meaning next to that. Now, I would like to ask you to keep an eye on the Japanese yen currency pair next week. Japanese yen, it's all Japanese yen pairs, pound yen, USD yen, euro yen, all of them, they are in a downtrend, all of them. The weekly price action created in all of them a bearish reversal price action. This gives a high probability meaning in all of these currencies. So, Adriana, hi Adriana, nice to see you here. What we want to do ideally is to confirm on the hourly time frame a kind of, like we saw here, a lower low. The market will retrace at some point higher, and it's going to give us these opportunities to go short based on our entries, which is the engulfings, which is the shooting stars, and all this. Okay, so if you would like to keep something in a close attention, please be one of the let this one to be one of your currencies. Magnus asks, are you the one who sends the signals? There are other traders that they send the signals, guys, okay, on a daily basis. So next one, Euro Japanese yen. The same with this one here on the weekly chart. On the weekly chart, we do have a reversal price action again. Okay, the euro is one of the weakest currencies in the market right now. We don't know what's going to happen next week, but we expect it to remain a weak currency. So we want to see how it's going to go, and based on that, we want to pick up some short opportunities. Short means we want to sell the market, ideally. Okay, how can we do that? Something that if you ask Diggins, how we go through the private coaching and how do I teach you step by step how to do the analysis, and we identify what you need to learn in order to complete yourself as a trader. I'm sure you're going to hear a lot of valuable stuff from that gentleman. So the price at some point will move upwards. Okay, why it's going to move upwards? Because from experience and further analysis that I do on trading about delta, about volumes, about other stuff, these bearish candles here, they might scare some traders, but what do they mean? They mean that somewhere in the middle of these candles, usually there is the majority of the of the activity, of the volume of the orders, they pushed this price, they caused the price to melt. So the market participants, the traders, professional traders, algo traders, they try to push the price at some extent somewhere around the middle of this one, because it's going to fill up more orders to help the price decline further. Okay, so if we want to keep an eye on that, we can use some Fibonacci retracement. And even if you drop, even if you put the Fibonacci retracement from here, the 61.8, it's somewhere in the middle. Okay, so nothing is just random in the market. No, there are many random things, but also there are things that they are very mathematically oriented, let's say. So please keep an eye on this one. Next one, Euro Swissy, another currency pair that is worth to have our attention, because the weekly chart still in a downtrend and the price created a bearish engulfing reversal price action. Guys, are you still with me? I hope you're not, you didn't fall asleep on your computer, huh? You still here? Are you enjoying the webinar? Are you learning something? Okay. So, okay, yes, please, loving it, go on. Okay, thank you very much. So, bearish engulfing on the weekly chart. It means that if we go down to the hourly time frame and we zoom out a little bit, we can see that this market already turned from this uptrend to a downtrend. It broke all market structures we wanted to see here, and now it's hitting lower. So if we zoom in a little bit, so what we want to see here, we want to see green candles. Always keep that in mind. You want to, by the way, I move my hands and my web camera, it start doing weird stuff. So if you see zooming in, zooming out, I'm not playing with the camera. It's just because I move my hands. Okay. So when we want to sell the market, we need to wait for green candles. We need to wait for bullish candles. We need to see the momentum to move a little, to push the price upward, and then we want to see a reversal price action to go and short and sell the market. Don't rush and sell the market right here, because you might gonna be scared that what if it's gonna go down without me and I'm not gonna be in the trade. No, that's not a professional trader's mentality. Okay, we have to wait for the market to make its own thing. It's going to come up at some point, and then we're going to sell. Maybe it's going to happen on Monday, maybe it's going to happen on Wednesday. Okay, but the best thing, the best advice, not a financial advice, I can give you to help you to fast forward and become a successful, a skillful, a profitable, a professional trader is this. Do always understand that the market moves in this way. Do never rush to enter a trade because you are scared if it won't take you with a trade and you will not be in that trade. Wait for another opportunity, and the market always it's on the go. Okay. USD from Nicholas said, USD Japanese yen, please. I'm waiting for gold. Yes, we're going to analyze the gold. Will you do a gold analysis for next week? Of course I will do. M said, I am new. Please simplify as much as you can. Nenad said, do you think that Euro Swissy will go down? Yes, I think so. Yeah, because of what we just explained. So what I want to do here is to wait with patience to see green candles. And ideally, I want to see green candles at areas of resistance. I want to see reversals at areas of resistance. I want to see the green candles reach the resistance and then a bearish candle to false break these areas. That's how I trade actually, and that's how I teach you how to trade. Okay. In regards to try and simplify as much as I can, I mean, I think I need anywhere between 2 to 3 hours to just break down the strategy the way it has to be break down. And in this webinar, in 45 minutes, to cover all these currency pairs and commodities, it's kind of impossible to give you to go deep into the strategy and why I trade like that and explain you everything. This is the reason I said, if you need, and I'm not saying that to promote nothing, I'm just saying that that's a reality. If you need really to learn trading and you need some personal approach, you can contact me and I can help you with that. That's not a problem. But in this webinar, I have to and I want to keep the content and the webinar relevant for everybody. Okay, that's the reason. And I hope you appreciate and you understand it. Casey said, hello, friend. Nice meeting your market analysis. You are the best. Oh, thank you so much. I hope you find value out of that. Next one, let's check the gold for our friends that they anticipating gold market. It's the third week that you asked me if I think that the gold, actually, sorry, I didn't see the question yet. Usually traders ask me, do you think gold is going to go down? Gold is going to go down. Gold is going to... Yes, at some point, gold, it's going to go down. This is not the right question someone needs to ask when he or she wants to make money from trading. The right question is, what should we do while the market is rising? And the answer is, while the market is rising, we have to try and get on the long side based on this analysis here. Now, if we find, like our traders, they find opportunities on the 5-minute chart and 15-minute charts, and they go short on the gold and they take it exceptionally well, that's another story, because there are downtrends also on the lower time frames, which we can capture them. That's not an issue. What is the issue is, and excuse me that I'm wrong, but I want to help you here. What is the issue is to enter the market and enter the market thinking that this is the top and now it has to move downwards. And because of that, you have that sense of certainty and you're sure that this isn't going to move higher. Therefore, you enter short, no stop loss, you put a lot of money on that trade, and every pip that the market goes against your position and moves upward, you explain it, it creates pain, it creates everything within you, and you are getting frustrated and you don't know what to do. So here is the answer. If you want to go short on the gold, please make sure that you find a time frame that has a downtrend and trade the downtrend. Okay, how do we trade the downtrend? We wait to see lower highs and lower lows, like this one here. Then we went to see green candles. It means there is a retracement in place. And at some point, we want to see a red candle. In that red candle, if it's a bearish engulfing, by the way, I shared a lot of my content with many of you guys. If you want, you can send me a message on social media, or you can just simply ask from the support and they will forward you the some bullish engulfing, bearish engulfing, some candlestick price action patterns that I created for you, and I teach them, of course, in my course in a more detailed way. So let me know and I can share them again with you if you need to, if you don't have it. I mean, if it's your first time here. So On this particular one, let's say we identify that the hourly, it created a new market structure, all right? And the market makes lower high and lower low here. There is also this kind of resistance here. If we draw Fibonacci from here down there, the 61.8 is at this point here. So we can get rid of that now. So if we don't pay attention to this and we said, okay, I want to have a cluster of orders that I want to look for trades, for example, you can use this area here as the ideal area to look for short positions. So if you're going to decide to enter here, please pay attention to me. If you decide to enter here and go short based on this analysis, you must accept that this trade also have a risk of being a losing trade. All right. So if you're going to enter short here, you place your stop loss, let's say, somewhere above there. If the price moves against your position and takes you out of the trade, you only lose what you initially set to risk in that trade. You don't enter here short, and because the price move against you, you go in another short and you do the martingale system. If you want to do martingale system, there is a way to do martingale system, and there are things you need to learn. I can also teach you this stuff, but I don't want you to just think that I can never get it wrong. I enter there and I'm the king and the queen and it's going to come my way. And you just need one trade to destroy your thinking process as a trader, okay? I'm talking to you from a professional trader's perspective, guys. It happens, and I think that you are also lucky being on this webinar because I'm in the category of a professional trader. I'm not just somebody that appear from the YouTube and I come here and I just do this, pretend that I know things. These are real things. We are here because we want to make money from trading. I'm not here because I want to be right in a trade. I don't care if I'm going to be right in a trade anymore. I want to make money. My main goal when I start my trading day is I set up myself that, hey, I'm here to make money. I'm not here to mark around, but with the process of making money, I'm also willing to lose trade. I'm also willing to lose money. I'm also willing to let the market show me if I'm wrong. I'm going to just be out of the position. I lose what I risk, and that's it. I continue the next day and the next day and keep on going. Okay, so Lency asks how many positions I can open every day with the amount of 675 Canadian dollar. Oh, Leslie, it depends on the leverage you have from the broker. It depends on other factors as well. It depends on your stop loss, this stuff. Okay, there are a lot of things. Paul, sir, when will the courier be available? Because sometimes there are orders sent, and okay, this one, guys, send message at the support, and the team will assist you better with that. Okay, I can't answer that question. Sorry, I don't know. So USD, Japanese yen. What's going on with this one? It's going to be actually maybe better than any other Japanese yen currency pairs. Why? Because if the non-farm pay, because it was a bullish engulfing. Let's start from this one. Last week was a bullish engulfing, and we said that based on this one, and as the price is at support, weekly support, we want to buy the market. And until Friday, all of our trading activities, at least all of my trading activities, were looking to buy the market. Did I capture a handful of trades? To be honest, only one trade I managed to get here, because most of them, the way I trade, they played out when I wasn't looking even on the chart. So I didn't manage to get the trade. They were good trades though. But once the price now reached this resistance area, which it was a cluster of kind of moving average on the weekly chart and all this stuff, then the bullish engulfing didn't play out at the end as it's supposed to play out, to push the price higher and breaks the level of resistance. And we see a bearish reversal price action printed on the weekly chart. We can use this, and in our benefit, first you need to acknowledge that there is a support here. So if you go down to the hourly time frame, you want to again trade short positions until the price reach this support. Always wait for these cycles to appear. All right, if the non-farm payrolls, they will create bearishness on the US dollar, definitely it's going to make our life much easier, and we're going to continue looking for short positions here. Does it make sense to you guys? Let's check NASDAQ, something that it's interesting, or US 30, DAX 40. Sorry, I said US 30. DAX 40 or DAX 30. Let me show you a real example on this one and what actually happened last week. Last week, my analysis, it was we are around the all-time high and the price action was a bearish price action. So I was looking to go short on this one. All right. On the hourly time frame though, from Monday, I was constantly looking only for short positions. So once the price started going crazy upwards, did I look for long positions? The answer is no. Why I didn't look for long positions? Because my trading plan based on this was only to look for short positions. Now, some traders may ask me, Theo, why didn't you become flexible to look for long positions? It wasn't about flexibility to change your trading plan bias. It was only about market perspective. When you are looking at the all-time high prices and the market is keep on going, it becomes very hard if the market doesn't create deep pullbacks to use it in your advantage and go with the market flow. Okay, that was the issue with that one. It was Thursday and the market was rising and rising and rising and rising and rising and keep on rising. So these are the things that we have to learn from trading actually, because if you don't use the weekly chart the way I show you to use it, guys, I didn't wake up one day and I decided to do that. It's been 11 years since I'm trading, okay? It's not just 1 month or 1 year. So I went through a lot in the markets. You can't imagine. Every single worry, fear, happiness, euphoria, every single thing you can write on the chart, I can give you an example that I went through of that. Every single thing. That's why I'm here, because I went through all the pain and all the suffering and all the extreme emotions of euphoria as well and everything. That's why I create the mindset that I have today, and I'm in a position to mentor and coach traders how to become successful in trading, because I went through this stuff and now I have a solid trading mentality, mindset, and a strategy that I use day in, day out, and I don't question them. Okay, so with this, as we said, we were looking on the weekly chart and we make our trading plan. We can't go middle of the week and say, you know what? I think my trading plan is not working, so I'm going to look to trade on the other side. Or no, this might be a wrong price action signal on the chart. No, it's something wrong with that because the market didn't move as I was expecting it to move. Not every time the market will move as you expected, as we expected, okay? But this is how we approach trading. We said we commit to this direction this week because of this reason, but we don't blindly go and sell the market. We want to let the hourly time frame to create these lower highs and lower lows before we go on to sell, okay? And you can use it as an intraday strategy. As a day trader, it works exceptionally well, and it is brilliant. Question, sorry. Some people, they ask, let me see. Yeah, I think you can send me messages also on Telegram, not WhatsApp, them on LinkedIn. If you're using LinkedIn, I mean, it's totally fine. Just to forward you the picture, yeah, totally fine. Any other question? I think we covered a lot of stuff again tonight. Please, the attention has to be on the Japanese yen next week. Maybe it won't be as we expecting it to be. We don't know what the market is going to do, but there is a solid, defined price action trend on the weekly chart, and it might going to play out as we expected. Why not? Okay. Also, Australian dollar, Canadian dollar, the last one. I know that I delay you a little bit, but that's okay. Australian dollar, Canadian dollar, the price on the weekly chart, it's in an uptrend, is rising, higher highs and higher lows. We don't know if it's going to continue for more, but that's what we see, and that's what we want to trade. So here we identify a fair value price here, or some people, they call it fair value gap. It's not a gap, so I don't like the word gap. The gap is this one here. If you are a bit confused, this is a gap. And because it's the beginning of the move, we call it breakaway gap. If it was the same gap somewhere in the middle of the move, we would have called it runaway gap. And if it was the gap right at the end of the move, we would have called it, guess what? Breakaway, runaway, and exhaustion gap. So here we are facing a fair value price that the market is left it unmitigated, therefore we expect it to be filled. Now there is an area of support here. There is also, we can hide our stop loss below there or below there. If the price comes here, prints a bullish reversal price action, we are good to go and look for long positions. Okay, keep that in mind as well. And about Nasdaq weekly chart, it failed to create a solid higher high. It left behind, it created a higher high, but it left behind this reversal candlestick price action. So on the hourly time frame, it's ranging here. Okay, it doesn't go anywhere. Let me just remove this one or remove all drawings. Here it doesn't go anywhere. The market is clearly ranging. So if the price breaks below this area here, then we have to be aware that there are another support levels down here. So if we see lower highs and lower lows, we can definitely go for short. But if it's going to break above here, our take profit has to be this high here. So our room of opportunity, actually, it's either in this section or in this section. But as long as the price remains within this area, it becomes a bit unhealthy for our capital to try and pick up trades. Okay. VS asks, please a bit more on gold. What do you think about tomorrow and the upcoming week? Because gold is losing bullish volume in weekly chart. Okay, look, we can't say that is losing volume on the weekly chart because pretty much the size of these candles are pretty much equal. So what will be the deal on the gold? First, we have to see weekly reversal price action in order to raise confidence and trade the gold short. Okay, that's the thing. Or on the hour, if we believe that this is the top, the hourly time frame already showed on the gold this lower high and lower low. And if this is going to be the beginning of the free fall, then it's going to start from somewhere there perhaps. Okay, but if the price, it just make this retracement on the hourly time frame and then it's going to continue moving upwards, we don't know. That's why when we don't have a reversal price action on the weekly chart, it becomes a bit complicated to be, let's say, more sure that the market will continue based on the weekly reversal. So I think that's all from me today. I hope you enjoy it, and we didn't say about the oil. Okay, so about the oil, okay, here is the analysis. It's going to go out to a prop firm, actually tomorrow, tonight. So on the hourly time, on the weekly time frame, the price created a bearish engulfing price action, as you can see. So we are looking for short positions on the hourly time frame. It does this inverse cup and handle, or whatever is that round bottom, which is a reversal price action pattern. Now there is a strong area of resistance here. There are some Fibonacci retracements looking from this point to that point. And if the price declines somewhere there, we're going to look for short. If the price keeps rising, then we cannot help it. Okay, that's the reality. All right, everyone. So thank you so much for being here. I hope this webinar had a lot of value in your trading. I wish I had 2-3 hours here to teach you and go a bit more about trading and all this stuff. If you need any help, any support from my side about your trading, if you want to become and to trade yourself, please feel free, send me a message, and if I can help you, I will tell you how I work on one-on-one. How can I help you? And if you think that you're going to gain value out of that, then we can proceed. If not, we're going to be friends. I hope to, I would like to wish you to have a fantastic week ahead. Happy trading. And I definitely look forward to see you again next week, next Sunday, here with another webinar. Thank you so much, and bye, everyone. Have a great night.